All right, folks, welcome to the video. Anthony Special here with Hawkeye Traders. Want to talk about what we should be looking for in volume when identifying a price breakdown, okay? So there's several different approaches to placing a trade, and volume can aid you in each of them, whether you're a pullback trader, whether you're a breakout trader, whether you're a correction trader, or a double top trader, or a double bottom trader. I mean, it doesn't matter really what your preference is. Myself personally, I like to buy either the pullback or enter on a pullback, or if there's a breakdown or breakout that looks supported, okay? Price can always look however it's going to look, but it can be very easily manipulated, and when you are able to pair volume alongside that price, now you take that picture to a new depth, okay? There's a deeper way to interpret not only what's happening now, but what's more than likely to happen later, okay? I don't know how much I can stress this. Your charts should be extraordinarily clean, okay? Because 99% of traditional indicators out there that are offered to you, and you can go to any platform, right? This is TradingView. If I go over here to the top indicators and I go to community, I mean, guys, there are hundreds, and that's just editor pick, and now I go to top, and there's just, the list never ends, okay? So you could put lots and lots of stuff on your chart. I genuinely believe as you develop and grow as a trader, you will have less and less and less and less until you've ultimately gotten basically to where I am right now, right? Like my charts when I trade, it is a clear picture of the price, and it is a clear picture of the volume at the bottom. And if I'm intraday trading, I'll normally use a VWAP. That's it. That's it. Nothing else. Okay? Do I have a reference chart with, support and resistance and things of that nature? Yeah, of course. Okay? There's nothing wrong with that. You need to know where price is likely to change its trajectory. Right? There's nothing wrong with that. But when it comes to the analysis, when you're trying to put together a thesis or a picture of what you believe is going to happen next, I can assure you that less is more. Okay? So let's talk about this. This is a 5-minute chart, light sweet crude oil. This is an actual trade that I took myself. So I'm very intimately, financially connected to it. So I want to break down the thought process. I identified this live. I interpreted it live. I provided expectations for it live. Like, this was not a second guess or an afterthought. And in fact, this was a position that I put a substantial amount of my own money into, okay? I was nearing the end of my trading session. I was getting packed up. I had other things to do. I felt a great deal of conviction about this trade in order to place a trade. I normally would not place a trade as I'm getting ready to leave the office inside of the next 30 minutes or so. But I felt so confident about it that I was willing to put the risk on. So let me talk about it. Right here is the session low. Right here, this transpired around 4:40, 4:45 a.m. Eastern Standard Time, New York Seaboard. Okay? We come up and we essentially place a double top. We fail to push any higher than this prior high. In fact, we didn't even penetrate the entire wick. You could see that we came right back up. All right? So what is price between this low and this high? It's in a range, right? This, you could call this very conservatively a range. We have high and a high, we have lows and a low, and until we reach this area over here, what are we? We're stuck. We're stuck in a range. Okay? Now, I don't like to just enter the break of a range unless I'm able to confirm that that break has some real momentum behind it. Right? And I want to talk about this very specifically because you're going to say, Anthony, but the first break of the range has really high volume. And it does. It does have high selling volume. But notice that little yellow dot right there? That is a high volume radar dot. Why do we have radar dots? Because when you experience lower than average volume, higher than average volume, or ultra higher than average volume, you should proceed with caution, understanding that sometimes the follow through doesn't necessarily happen on that candle. More often than not, there's going to be a correction before the follow through. We often see reversals or corrections off of high or ultra high buying or selling volume. So it comes into, can we pair both what the price is doing with what the volume's doing and build a thesis or an idea around that we believe we can put a low risk, high probability trade on. So this initial break here, right here, this transpired at 10:20 a.m. You could see high selling volume and no immediate follow through. That's concerning to me. Right? If there's aggressive sellers coming in and there's no immediate follow through, that's concerning. Let's look at the next bar. We now have a decrease in selling interest. That's a little concerning, right? We go to the next bar. We have another decrease of selling volume. What is that telling me? It tells me that the sellers, for the moment, have either been absorbed by the buyers or are losing interest. Okay? And this happens. That's why I'm telling you, high and ultra high volume bars that the radar dot populates on, guys, you have to take a step back, compartmentalize the excitement. Oh, we've just broken out of a range. I'm going to miss the trade. Hang on. There may be a better opportunity coming for you. Okay? There may be a better opportunity coming for you. So I want to plot one more line on this chart as we continue to look, and it's at the low of this candle right here. Okay? I want you to see that what was previously support came back, provided support, and was broken, and is now providing resistance. Okay? Now providing resistance. So let's go to the next bar. So we had dipped twice in selling volume. We've increased slightly, then we get a strong push lower and a lot of buyers trying to push back up. Well, guess what happened when the buyers pushed back up? They weren't able to go any higher because they were pushing into an area that was previously support and has now been newly appointed resistance. Okay? Where did I get short? I'll tell you exactly where I got short, because I knew if I was wrong, I was only going to lose a little bit of money. But if I was right, I had a very high chance of making a good return. I got short on this candle right here as the selling volume started to uptick, and that I noticed that we were testing this prior low, which was support and support. When this candle did not close above this line, I felt fairly confident that we're starting to see an increase in selling, and that there's a pretty good chance that what was previously support will now be newly appointed resistance. So this candle prints, I get short on this candle. In fact, I got filled at 79.50. It started bouncing back up as I was getting ready to hit the sell button. I put my stop at 79.55. I was literally risking 5 ticks. That's it. Okay? Now, with that being said, as soon as we pushed back into this low, I started taking some profit. Right? So this low is at 32. So from 50 to 32 at 18 ticks, I'm already starting to take profit. Right? So now, if the trade goes against me and I get stopped out, I'm still profitable on the overall position. But if the trade continues in my favor and I turn out to be correct that this very specific line is now newly appointed resistance, you can see we are unable to penetrate it. And guess what? Boom. Boom. Notice this here, right? We get a huge increase in selling. We consolidate. That increase in selling comes up again. We push, we consolidate. It pops up again. We take a strong push, we consolidate. That's the definition of a trend. Understand that the volume is going to impulse and correct with the price action. We started witnessing that. And listen, I had traders that captured profits as low as, well, I should say myself, I closed my position because I had to leave the office at 79. But the traders who were with me that I dictated this live, the analysis, the interpretation, and the expectations, I said to them, I'm like, listen, 79 is going to be higher time frame support. If we break that, well, then we'll see where the market takes us. Okay, we have, all I have to do is look left. Okay, we had double bottoms yesterday here at 78.92. Okay, we sliced through that like butter. Notice, oh, where's our next pivot here? All right, we got a lower pivot here, 78.65. Okay, you can see we still broke through that pretty aggressively. Our next little pivot's probably right in this area here, 77.93, which we did not achieve. There was a little correction there, this last little bump. But just these notable lows, guys, were targets. All you have to do is look left. If you look left, there is a roadmap. Okay? If you forget that all of that exists, very quickly you're now riding a roller coaster. Riding a roller coaster is extraordinarily draining and financially dangerous. Okay? But if you are just willing to read the roadmap, let the price action and the volume tell you everything you need to know. What is my analysis here? A double top, the session low, a slightly higher low. That's my whole analysis. I have 3 horizontal lines. It's my whole analysis. Right? Here's the initial push out on high volume with no follow through. And once we close below that, we never look back. Guys, this is all you need on the chart. You're looking for the smoking gun, the silver bullet, the holy grail. I don't know what you want to call it. Okay? I have watched traders spend tens of thousands of dollars chasing their tail looking for this next great thing. If you want to be successful in trading, you are the next great thing. You are the only great thing. And for you to be great, before you add anything else to your chart, you must understand the relationship between volume and price action. Okay? Me drawing these lines is just an interpretation of price action. Okay, here's the session low, and here's the session high, and here's a double top. That's it. And we have slightly higher appointed low right here. Let me drop that down so that I'm 100% accurate, but right there. For some reason it doesn't want to give me. Right there. That's it. That's it. And now, what do I need to understand? I need to understand what is happening between the relationship of what the price action's doing and what the volume's telling me down below. And that only comes, guys, from having the right tools that are going to help you see it with clarity. Okay? Hawkeye makes it as simple as can be. What you see printed on my screen will work on TradingView, TradeStation, NinjaTrader, MetaTrader. Totally up to you. Stocks, futures, Forex, cryptocurrencies. Totally up to you. All you have to do is that when the opportunity presents itself, you need to now interpret the relationship between the volume and the price action which we're going to teach you to do. We're not going to hand you these indicators and go, well, I hope it works out for you. Ooh, we are going to give you our library of studies, okay, showing you the intricate ways that volume and price action interact, how we can predict with high selling volume that and no follow through that there's probably going to be a correction or reversal. How did we know that we weren't getting a reversal? Because we couldn't violate what was previously support is now newly appointed resistance. Where do I want to get short? I want to get short where I have to take the smallest amount of risk. That's my pullback strategy. My breakout strategy is when I close below these lows on increasing selling volume, I would get short right here. This is going to leave a little more exposure. Right? If I'm working with really small candles and I get a breakout on increased volume, okay, right? I got a little bit of exposure. But this presented the opportunity to come back into these lows here that you could see were support, right? We bounced here, we wicked through here, we touched this twice, broke below it, and then all of this was resistance. Guys, it's just that relationship. Okay, if you're waiting for a green line to cross or blue line or red line or whatever color your lines are, if that's what you're waiting for, you're never going to find consistency because the market dynamic is constantly changing. The only thing that never changes is the relationship between volume and price action. Once you understand that relationship, the market becomes a roadmap, not a roller coaster. You have to decide. Are you in this for thrills, or are you in this desiring to master a skill set that will pay you dividends for the rest of your life? It doesn't matter if you're day trading, swing trading, position trading, stocks, futures, forex, cryptocurrencies. Okay? It doesn't matter. The application of volume and price action works broadly and should be implemented in every single approach to the market. So if you want to learn more about the Hawkeye method, if you want to learn more about accessing the way our volume and price action prints on your screen, there's a link below this video. I encourage you to click on it and consume the content. There's an email address down there both for myself and for my concierge team at Hawkeye. Feel free to email me or them. We will answer whatever questions you may have. I'm also going to put a phone number down there. Feel free to give us a call, okay? I encourage you to like this video, subscribe to the channel if you haven't done so yet, and feel free to leave a comment below. God bless, guys. I'll see you in the next video, and I'm wishing you happy and prosperous trading.